Hey guys, it's your Tax BFF here with another free 5-minute financial fix on a Friday. Today we are going to be talking about tax planning. What is this? How do you do it? What is the whole thing behind it? Let's get into it. Like, comment, and subscribe. Today we're going to be talking about tax planning. So everybody knows file taxes, right? Most of us know pay some estimated quarterly taxes. But this whole thing and new phenomenon of tax planning sometimes got you guys in the chokehold. And it's something that the rich and wealthy have been doing forever. I'm going to give you a little insight on the tax planning session, go through some of the strategies that I use when I'm going over tax planning with my clients, and just kind of get you introduced to this new and very necessary way to make sure you're saving on taxes each year. So number one, find out what tax bracket you're in. How simple that sounds, but you want to take all of your income. You want to make sure that you know what you made up to this point, and you want to project what you're going to make for the rest of the year so that you can have the total income for the year. Find that tax bracket, and then you want to separate that income. What's passive? What's earned? What is from assets that we could depreciate? What are tax shelters? What are things that we could carry forward? What do we have? What are we working with? Knowing this is half the battle, because once you know what tax bracket you fall in, you then can assess what your federal tax liability is going to be. Then you got to start thinking about thresholds. You're thinking about all of the things that you used to take in deductions, or things you know you want to take in deductions for this year. For instance, a lot of people are buying rental properties and getting into this rental property game, right? But if your income is over $150,000, that rental income then gets a little tricky. For instance, over $150,000, you can only write off up to the amount that you received in rent. Meaning, if you receive $8,000 in rent and you write off $9,000 in expenses, you just kind of break even on that rental property. You do not take $1,000 business loss unless you are a real estate professional, and that's a whole nother video. But if your income is less than $150,000, you can take that business loss and it will benefit you greatly. Another thing, passive income, we're usually talking about depreciable assets. We have some things we can write off. Versus your W-2 income, it is what it is. Two things you need to know about that W-2 income. If you have multiple W-2 income and you have not indicated on your W-4 form that you have another position making X amount of dollars, your job is only, and I'm talking about my people who claim zero across the board, your job is only going to take out the amount of taxes you need for that income. So if each of your positions are not in the same tax bracket individually as they are collectively, you will never take out enough in taxes. You will constantly owe. And a lot of people are like, well, I don't want them knowing about my other job. And I totally understand that. But that's where tax planning comes into play, because now you have to assess on your own, without the help of the W-4 form, how much you should be taking out in taxes. Then other things, your modified AGI being over $85,000 take you out the student loan deduction. Wait, just because I'm making a couple dollars, I can't write off my student loan interest. I know it makes no sense, but there are thresholds to every single rule. And most of my high earners are actually phasing out of a lot of the deductions that they typically would have seen when they were making a little less money. So if you know that this year your income is going to increase drastically, or your life is going to change, you're going to get married, you're going to have a kid, you're going to start a side hustle, you're going to have 2 jobs instead of 1, your business just signed a huge contract. Any of these life changes, one of your children is no longer getting a child tax credit. They just turned 18, or they're not in high school anymore, they're going to college, and you want to know about writing off their college education and their tuition, or allowing them to claim themselves. All of these life changes will drastically change your tax situation, and tax planning becomes that much more important. So, in my tax planning strategy sessions, what we do is we assess where the income is, where the federal taxes are, how much should be withheld in federal taxes or paid on estimated taxes, but then we start to reduce it. What can we contribute to? How much can we put into an IRA? How much can we give to our passion projects that are at nonprofits or churches? How much can we put over here so we're not giving Uncle Sam all of the money over there? Simple as that. And it is so important to do because if you're going based on your own understanding of what you've seen on Instagram or what you've heard from an uncle who's been in business for 40 years or what you thought you did 2 or 3 years ago, it is so important that you know the tax code changes all the time and there are loopholes, gray areas, and thresholds for everything. Hope that helped you. And I hope you just went over to my site and booked your tax planning session. I would love to talk with you more. But like, comment, and subscribe. Let's keep it going and making sure that we are keeping more money in our pockets and reducing our tax liability as such. Have a great day.